And you have some very nice parameters for us this morning. So, a red sweep, dollar goes up 5%. A Trump victory, this is all from your notes, I hope this is still up to date. A Trump victory, but with split Congress, the dollar goes up 1.5% to 2%. And a Harris win, the dollar drops. This is where the range of movement we're expecting, right?
Absolutely. And I think the key issues here are, firstly, what is the policy on trade and tariffs, and second is what's the policy on fiscal. And I think that those are the two main channels through which we're thinking about it for FX. And of course, with the red sweep, both of those get activated and sort of extends the shelf life for the dollar. Absolutely.
Okay. And what are the? I mean, we were hearing from Chrissy about the Mexican peso. A lot of people focused on the euro. A lot of people yesterday we were having conversations about small open economies in various parts of the world, which in a sort of aggressive trade tariff environment might not do very well. Do you have a sense of what is sold off in exchange for that dollar gain if we did see a Trump victory?
Yeah, absolutely. I mean, I think the first thing to note is that for tariffs, clearly it's China and Europe that are really front and center of that whole argument. And so dollar CNH substantially higher, but of course that's managed currency, so it will unfold in sort of a policy-driven way, so to speak, so more controlled. Also, we know that China has already lined up the fiscal response. Potentially, they have the NPC meeting going on right now. So based on the outcome of the elections, can fine-tune what the size of the overall fiscal package will be. So there is, in a way, a backstop or a floor on China assets in reaction to a possible Trump outcome. Eurozone is, I think a slightly different story, where there is no such fiscal package or anything like that in the offing. So at the end of the day, any kind of policy heavy lifting is going to have to be done by the ECB. So I think the question of whether the terminal rate that the market is pricing for ECB right now at 2% gets called into question. I think the markets will have the pricing and a lot more easing for the ECB. And then beyond that, I think for commodity currencies, in 2018, 2019, when we did get the tariffs put on, it was commodity currencies like Brazil, Colombia, Chile, Sweden, small open economies, heavily dependent on manufacturing, that weakened the most. So we kind of expect the same playbook.
So let's just talk about the euro in more specific terms. It feels very binary in terms of Trump, Harris. Just give us the kind of sense of the range of movement that we could see. Trump wins. Where do we trade on euro? We're at kind of circa 109 now. Do we go back towards parity? Do we stay static roughly where we are now under a Harris win with a kind of gridlock story in Congress? Kind of just give us the parameters there.
Right. So Harris is the status quo outcome for markets. However, we shouldn't view this. It's a status quo for policy, not necessarily for markets, because if she becomes president, then you take out a major tail risk on tariffs and trade policy right away. So for markets, it should mean that we should settle at a higher level for both CNH and euro, just purely because that downside risk has been taken out. So
higher level means.
So I would say our targets for euro dollar are 113 to 115 in a Harris outcome with the split Congress. So we make a new high in the euro over and above the 112 that we had once the trade uncertainty is taken out for a little while. It might eventually be a trap, but none of the structural problems in Europe and China get fixed with the Harris outcome. In the case of Trump, I think it depends on whether it's a split Congress or whether it's a red sweep. For the split Congress, in either scenario, you have the tariff risk activated. So it should be euro weaker towards 105, let's call it, in a split Congress, because only the tariff part of it is activated. But if you're talking about a red sweep, then you could actually have a situation where U.S. interest rates are higher because we might have the more fiscal easing in the U.S. as well, which sort of gives you a double whammy. And then that's what could be needed to get euro dollar towards parity. So we're looking parity in a red sweep, 105 on euro dollar with Trump and the split Congress.